Hello everyone. In this video, we are going to see how to draw a trend line. So, there are many methods of drawing trend line, and which one actually works. So, this is the method what I have been personally using, which has been back tested so many times across many instruments, Nasdaq, Tesla, Gold CFD, Metal TFD, and if you're trading in the Indian market, Nifty, Bank Nifty. So you can use this method on any instruments. So basically, what we need to do is we need to connect all these swing lows first. And if the stock is in uptrend, in case if it is in downtrend, we need to try connecting all the swing highs. And the rule is, so it should have minimum 3 touches. So the higher number of touches we have, the higher number of confluence you can take. Otherwise, if it has only very few touches, like one or two, then most probably it won't be respected. Okay, so here, for example, this one is like this is an uptrend, and we are in 1 hour time frame. And based on your trading style, you can choose your time frame accordingly. If you're a day trader, you can either choose 5 minutes or 15 minutes, and if you're an investor, then the best time frame is 4 hours or day time frame. Okay, so here you see in this one. So how many touches we have? So we have one, and we have the second touch here, and we have the third touch here. So some of you might have this doubt whether we need to draw this from the wicks or we need to draw exactly at the candle body. Okay, so as long as you have a touch, whether it is on the body or a wick, then you are fine. But make sure you have multiple touches. At least it should be minimum 3 to 4 touches in my opinion, otherwise it won't be respected. So now you see we have already a 3 touch point here. So when Nasdaq, so here for example we are in Nasdaq, when this approach comes towards this trend line, there are 90% chances that the buyers will step in, because this trend line is proven, it has a confluence. And if you want to add more confluence for a stronger confirmation, you can just check the EMAs. For example, you can use EMAs, and in case if your trend line is very close to 100-day EMA or 200 days EMA, then you can be make sure that you can expect a trend reversal at that particular area. But your entry should be made only upon confirmation, not before that. So what you need to do is, so please, when the price approaches this trend line, first check for a pullback. Check if there is a pullback or not. So now we are in 1 hour time frame, and make sure you are checking this after the candle close. Okay, so if you see this one, this large candle, so the price actually broke down this trend line, but when the candle closed, what has happened? The candle body has closed above this trend line, which means the buyers have stepped in and they just pushed the price back. So is this confirmation sufficient? In my opinion, no. It is better to wait for one more candle if it is a 1 hour time frame, and you can also go down to 30 minutes or 50 minutes time frame. So here if you see in 15 minutes time frame, so first there was a breakdown and there was a pullback. So the candle body closed above, we have a long green candle, then it went all the way down, then again it was retested, right? And if you go to 30 minutes, see here you can see a very small consolidation in this area, right? It's a You can see a very small consolidation. So once this consolidation is over, once the candle close above, then you are all set. Okay, so if you would have make your entry here, then you see, and this risk reward ratio is purely depends on your capital and your risk appetite. But what is more important is that your entry or exit, I mean, if you're on the buy side or sell side, you should only take a trade only upon confirmation that the trend will continue in your direction. So this is more important. You can use the same logic for any other instruments and across any time frame. So for more updates, please stay tuned.